All right. Good morning, traders, and welcome to the opening bell. Today is Monday, May 11th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you. We are heading into an interesting week. We got negotiations going on between Iran and the U.S., kind of breaking down over the weekend. The markets are taking it in stride. We're a bit mixed here at the open, tepid losses. But the US dollar and all the US crosses continue to remain right at those key levels we talk about. Potential breakout in sterling, topside breach attempted in euro, dollar sitting at support, gold with a little bit of a breakout here. Also, to test a rally towards major highs. So we got a lot of levels to look at. We'll cover all the US dollar crosses, gold, and Bitcoin. Looks like we're trying to teeter again near resistance. Any other questions or trade setups you have, feel free to throw them on the message board. We'll be getting started in just a moment. All right. Good morning again. Great to see you all in the room. Dan, D's in the house. Eman, Frank, Huron, James. Great to see everyone here this morning. Ken, Leon. Hey, Eman, great to see you again as always. So DXY is right at that December low day close. We're now on 97.88 for like the start of the month, since literally since the start of the month. Here's our monthly open. And it's been support. Look, Friday, we technically closed right below it, but then we gapped higher. We're kind of sitting right above it right now. At the end of the day, if DXY is heading lower on this stretch, rallies would need to be limited to that 200-day moving average. Comes in right around 98.50 right now on downtrend resistance. Initial resistance is at the yearly open. That's 98.23. If you want to get even more granular on the 60-minute chart, looks like the rally that we happened overnight trade failed right at the monthly open. That's what these dots are. So treat resistance anywhere from 98.13 to 98.23. That's initial resistance. Bearish invalidation at that 200-day. Now, if we're able to assert a close, a real break below 97.88, the next major level isn't too far, 97.50. That's the objective 618 retracement of the year-to-date range. Not Mike Boutros' opinion, not FOREX.com's opinion. Fact, it's also the October low from last year right there. And it converges on downtrend resistance, which is one of the reasons I'm kind of looking at it right at the median line. You can see really nice inflection along the median line here, right? Resistance, breakout, support, right around that zone. So 98.50, 98.40, right there is the next major key zone of support on the DXY. Right now, though, you're sitting at lateral soft support. That's a December low day close. You can see some real nice pivot action here. Let me put this on a closed basis. Look at that. What do you do from here? Need to see a resolute. Rallies should be limited to, if it's heading lower on this specific stretch, 98.23, but max rallies should be limited to that 200-day moving average if we're heading lower. Look for a reaction near 97.50. Now, for the record, sub 97.50 is really problematic. Like, there's nothing until like 96.80s. That's the low close from back here in February. And it's also the low week close for the year. So big levels. But it's decision time for DXY sitting right at support. Same for the euro. Not quite at resistance just yet, but that big level at 1813, 1826, that was the big zone that turned us earlier last month. We came into key support, which was the 200-day moving average, the 38.2 off the low, that swing high. We talked about that all last week. That held. Here's the recovery. The pivot back above the yearly open does bode well. And in fact, in overnight trade, guys, that's exactly where we turned from, right there at the yearly open, 1745. So similar scenario here. The yearly open is 1745. The monthly open is 1730. So that 15 pip zone of support, right? Later in the week converges on the upslope there. That's near-term support. Key resistance 1813, 1826. That's the breakout you need to mark the next major leg higher towards 1919. Okay? Initial resistance, key resistance, breakout level, initial support, bullish invalidation, 116.70 to 116.80. That's critical. Anything below this, you're looking, would suggest that a more significant high is in place and a larger trend reversal is underway. So yet again, not primed for like instant action. Let's go ahead and jump into position right now, but certainly sitting right here, not quite at resistance, not quite at support, Need to see some kind of validation here. Light unlimited on Euro data. You do have some commentary on Tuesday and Thursday. I think it's Tuesday and Thursday. It might be Wednesday and Tuesday. Tuesday and Wednesday from Lagarde. No, Tuesday and Thursday from Lagarde. So maybe she drops some commentary that shakes the markets a little bit, but all things held constant, you're not too far away from spitting resistance there on Euro. Now, for the British pound and for the Aussie, a little bit of a different scenario, okay? These are both tempting a breakout of last month's high, lateral resistance, the monthly open, all of it comes in right between 3604 is the monthly open, 3598 is the 618, 3593 are those swing highs from back here in May and August of last year. Really nice pivot. Remember, we tried 4 times to break above it. We did it on Friday. So was that a legit breakout? Based on our commentary on Friday, it looked like a legit breakout to me. So we closed there on Friday, overnight trade, dip below, but we're back above. Let me just show you the weekly chart really quick to show you how critical this zone is. Here's what it looks like on the weekly. So that close above the 618, again, 35.98, should be keeping the bulls in control towards 36.85. That's the high week close for the year. So let's see if there's some follow through here. That's all the point to say is we need to see some follow through. Zoom in deeper. Here's the 4-hour chart. And this is what I showed you on Friday. I showed you we wanted to stay constructive while above that swing low for the week. I moved that to that Thursday swing low. Okay. So 35.47. Wouldn't want to see anything below that if sterling's heading higher on this stretch. You also have a real near-term consolidation, right? If you bring this to a 60 chart, it's a little bit clearer. Higher lows, lower highs. You know what I'm saying? Maybe this offers a near-term breakout. I'm looking at that as well. It's sort of something I've been scanning since this morning. You also have a near-term trigger in RSI as well on those same reference points. So if you see a trigger break in RSI, momentum breaks above the slope, specifically above last week's high, maybe you get the resumptive move. Bottom line is 35.47 is going to be our line in the sand. Now, that doesn't mean that's bullish inval. For the bears to get asserting control, they would need to close below 34.65. That's where it would suggest a more significant highs in place and a larger reversals underway, right? Trading is an if-then proposition. That's the if. Constructive above 35.47. If we get the breakout above last week's high, 36.85, high week close. Next level up, 37.50 is huge. It's 2025 high day close, 37.45. 37.49 is the objective 2022 swing high. So again, levels really clear. A little bit of a consolidation crunch here, coiling up. See if we get the breakout there on sterling. As far as the British pound is concerned, you get preliminary GDP data from Q1 that comes out on Thursday morning. I guess this would be basically Wednesday night here in the US, but look for those to be really the major outliers for event risk out of the UK. That is sterling. Questions on the pound. Aussie dollar. Looking for some resolution here. Remember, we stayed constructive above 71.90. That doesn't change. Exactly what we said on Friday's opening bell remains, right? The divergence is there. Or I'm sorry, this was the wrong trade. No divergence here, but the point being the exhaustion. I think there was some divergence here, right? Yeah, there's some divergence on the daily chart rather, suggesting the top side might be waning a little bit, at least the thrust. We said that 618 of last week's range was a line in the sand. Still is. That's 71.90. Converges on slope. That's below the monthly open, below that swing low, and below 72. So I'm comfortable with that being near-term bullish invalidation. Next major region of resistance, we talked about that as well. 73 proper, 72.95. 72.95 is the 2019 swing high. Objective level, the 1618 extension from the advance off November's low is 73.08. Both of those converge on uptrend resistance over the next 2 or 3 days here. Okay, constructive above 71.90. What if 71.90 gives way? Well, now you're talking about the threat for a larger kickback towards a basic 38.2 of the advance. That gives you 71.08, those swing lows, decent pivot in price. You have the August 22 swing high at 71.36. I'd be looking at that as well. Either one of these would be sort of the first initial support zones you'd look for if 71.90 breaks. But that's kind of the game plan here for Aussie dollar. Remember, guys, as always, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals at this point. But if this breakout has legs, Got to see 71.90 hold. That's Aussie. Dollar CAD. So broke out of that downtrend last week. We talked about 36.50 being the line in the sand. Friday, we noticed that broke and offered support, and we were resuming higher. So look, we didn't quite make it towards resistance. You're seeing some kickback here. The line in the sand, the major key region of resistance. I've already seen people writing reports that, dollar CAD reversal is confirmed. I wouldn't necessarily say that just yet, guys. The 37.33, 37.24, that's the level that needs to break for us to assume that a more important low is in place and that a larger breakout is underway. Yes, we've broken multi-week downtrend resistance. That's true. But for us to say that, the low is in place or that we're getting a larger trend resumption higher, we're not quite there yet. Now, if this breakout is legit, again, this 618 is at the drop of last week's low. But for argument's sake, let's get much more near term. A near-term retracement of this advance. Look where the 38 comes in. Same level. So I don't need that 618 anymore. 36.50. Look where the 618 comes in. Right along slope. There, over the next couple days. So 36.11. Initial support, near-term bullish inbound. I don't want to see anything below 36.11 if we're heading higher. If the breakout is legit, maybe you're going to break former resistance as support, fine. But I don't want to see anything below that. There's initial support. Friday's low right there. You talk about 36.42, 36.49. Key resistance, 37.24, 37.33. That's the breakout. That would open up the potential for a much larger advance. You're looking for 38 all day long. You got 38.08, 618 at the drop. You got 38.15 is the 200-day moving average. So clear-cut levels on the breakout, but the initial advance looks a little bit exhausted here. So initial support, look for max 36.11 on dollar CAD. If we're heading higher, sub 36.11, you're looking for trend resumption, guys. That would be really bad. Questions on Loonie? No data this week of note. Okay, dollar yen. Japanese yen has been sort of a mess, but we've been tracking that drop. And last week's low, we talked about it on Friday, was exactly where we had looked. Here's the weekly chart for dollar yen, just to put things in perspective of how critical of a support zone that was. 154.79 to 155.40. Huge 618 off the low of the year. 2026 low week close. Uptrend support from last year. All of it was right there. We even closed right back at the yearly open. So, my problem with this trade, guys, I've voiced in this room many, many times. I don't want to beat a dead horse, but I'm not trying to get long and try to fight, the Japanese officials. And at the same respect, I'm above support. I'm not necessarily going to try to sell into a major pivotal support. That's my piece, said and done. That being said, from a technical standpoint, resistance 57.42, 57.70, that doesn't change. This was a huge pivot in price, massive pivot in price, right? That's still resistance. Break above that would suggest a more significant near-term low is in play and the potential for a rise towards 58.70s again. If we close back below the monthly open, which is 56.62, you've got the yearly open at 56.66. Close below this zone, you're looking for a test again of key support, 55.40, 54.70. So, I don't know from a trading standpoint, guys, what that means for you guys. If you're looking, if you feel compelled to inclined to take a position on this, but those are the key levels I'd be looking at. Below 54.70, sayonara, big break of uptrend support. Above 57.70, I don't know. You're testing the BOJ, you're testing Japanese official again. I don't, want to be trading in an environment like that. So not my cup of tea, but those are the levels for you. That's Japanese yen. All right, last but not least, just Swissy. Look, we're at that key support zone. We're trying to pivot below it, but we haven't made the break yet. 77.72, 77.75. That's the level we've been talking about pretty much for all month. We tried to drop into that on April 17th. Didn't quite get the clip of that 618. We got it last week, but then it held, and we closed just a hair below it. So if this is going to be a legit break, we need to see some follow through here. Break below the median line. You're looking for 77.30. You're looking for 76.98, essentially 77. Initial resistance 71.16. The monthly open comes in at 78.16. The monthly open comes in at 78.14. So that's initial resistance. Bearish invalidation, the level that would need to break for there to be a suggestive low in place is all the way up at 78.75, 78.73, this zone right here. Big zone, downtrend resistance, lots going on up there. So again, we're at a major inflection zone. We're at a major pivot price. If we're going to see a break, look at that break below Friday's low, 77.60, to really fuel some acceleration. Until you do, you're basically sitting at support. So that's dollar Swiss for you right into the start of the week. If DXY breaks, might be kind of the go-ahead to give you the indication that we're going to see that next leg lower in the end and dollar crosses, but we're sitting right at support right now. So look for an inflection there on Swissy. All right, quick look at the commodity block. Here's gold real quick. That uptrend held. So Thursday, Friday, our bullish invalidation level was at the monthly open. That's still the same game, guys. So 46.22, as long as you're above 46.22, you're still constructive. The level was 47.42, right? That was the 618 of the drop. That's where we failed last week. We never actually got a daily close above it. We're trying to make a push here today. If we break, there's nothing until 48.55, 49.10. That's critical resistance. That caught the highs last month. That's major resistance. That's next major lateral hurdle for the gold bulls. But just today, right here, watch the close with regards to 47.42. We need to see a close above that. Okay, constructive above the monthly open. For the bears to reassert control, you need to close below 44.92. That's the doomsday for the next leg lower in gold. But checking resistance right now, aujourd'hui. All right, made good time today. Eman, you were in the last webinar I just did. Did you want to cover Bitcoin again, or are you good on that? We're straddling a major resistance zone we've been talking about for weeks. 81,038, guys, was the level. Like, here's what it looks like on a closed basis. You're still seeing divergence into that high. You're still holding the upslope resistance, but we're right there. So it still looks a little toppy, still looks a little tired. But look, we're constructive. We're in a bullish trend, but we're testing uptrend resistance. So 74,434, 76,159, that's key support, or at least near-term support. I want to say not key. Key support is 70,531, 70,283. That's bullish invalidation. Levels up on the upside on the breakout scenarios, 83,712 into 85,273. And then the yearly open comes in at 87,500. All three of those levels, pretty key targets on the upside if we see a resumptive move here in Bitcoin. But watch the close with regards to 81. If we get back below that, it just, near term, it wouldn't be too surprising to see some kickback on this stretch. I mean, just off of last month's low, just off of this month's low, the April low, guys, last month, we're up 26%. No, I'm okay, thanks. But you did not answer my question about gold. Eman, what was the question on gold? In the last webinar, did I miss it? In that public webinar, guys, hundreds of questions come through. I tried to filter them and get as many through as I can, but I can only do so much. Let me know what that question, Eman, was. Again, if you have it on gold, I'm more than happy to cover that for you. That we got an OSWR last week, that we got an outside weekly reversal last week. We did. Yeah. So it depends how you judge it. So let me take a step back. This is where technical analysts can get really into the weeds on the debate. The absolute outside day reversal, man, would have been if that daily close was above the previous week's high. So a lot of people are super sticklers about it, and they're like, no, that's not an outside day reversal because we didn't close above the previous week's high. We closed above the previous week's open. So there's another frame of thought, or school of thought, that would say no, as long as the candle covers the previous candle, meaning the body of the candle, not the wicks, then that does constitute an outside reversal. So, I don't like to get into the weeds. For me, even the outside day reversal, whatever definitive approach you take at identifying and validating that, it's just an added tool. For me, the fact that the outside day reversal, or what seems to be a potential outside weekly reversal, doesn't matter as much as the fact that it happened off of support. So yeah, I'm more inclined, Eman, to lay on the side of putting this outside weekly reversal in my pocket as like that's an added piece of evidence that maybe an exhaustive low is in place. Does that make sense? I know it's a little bit of a minutia answer, but add to that the fact that we broke, E-man, above downtrend resistance last week. So put the pieces together. I never take one technical factor and say, this is why I'm bullish. There's an outside weekly reversal. I'm bullish from here. No, but the outside weekly reversal off of support, that's an added second piece. We've broken above near-term downtrend resistance. That's a third piece, right? So now I have 3 pieces of evidence backing up my theory. And that's how I assess trades. The more amount of evidence you get to support your theory or your suggestive trade idea, the stronger the approach, the more emphasis or the larger trade size I will. So if my average lot size is X and I have 5 pieces of evidence all suggesting, this is a good trade, that'll be maybe 3X, 4X. If I only have 2 pieces of evidence suggesting it, maybe a third, but I don't really know, maybe that'll be 1X or half X, right? But the point is, I use the amount of conviction I have on the trade as justification for my lottage size. So being dynamic with the trade size is a big part, in my opinion, of trade. Trades that are the conviction is not so high, you shouldn't be heavy on those trades. And with the same respect, high conviction trades, yeah, you want to be heavy on those trades because at the end of the year, guys, there's only a handful of trades that make the whole year. So you want to be dynamic with your trade size. I went on a tangent there, Eman, but I hope that answers your question. Eman says, yes, thank you. Thank you. Always good to see you in the room. Great questions. But that would further lend support to the idea that if we break 47.42 on the upside here, you got some more upside in gold. But the monthly open would need to hold support if we're heading higher on this specific thrust. All right. Anything else you guys want to cover? Really quick. Bitcoin, we covered this really quick already. Anything else that you guys wanted to review? If not, we'll go ahead and wrap it up here. Mondays are always a little bit hectic with the double header webinars, but thank you guys for sticking it out with me. Stay light. The headline event risk starts tomorrow with the CPI print out of the United States. So this is going to be sort of the first read, the first major event risk for the week. We've gotten decent employment data, jobless, even initial jobless claims, guys, are surprising on the upside. So the dual mandate, still the spotlight is going to be fixated on the inflation picture. And this is your first read of the April CPI print. We are expecting an uptick. And again, now we're starting to see prints, guys, that do have the war factored in, where that higher energy price is starting to actually show up in the data. So everyone's going to be looking to see how high or off these expectations we are. We get producer prices the following day, so how it's filtering into the manufacturing side of things. And then on Thursday, we get that update on the consumer with retail sales on Thursday morning. There's a lot of event risk on tap. Obviously, the headlines with regards to the negotiations with Iran will be frontmost in the market's attention. I'll try to keep you updated on MB Forex as always. Amen. Thank you again. As always, God bless you as well. Have good luck trading, guys, and I will see you tomorrow morning, same time, same channel. Cheers.